Mr. Lano.
Except present, I'm here.
Darlene Lattimore.
Present.
Tina Fitzgerald.
Present.
Robert Susulich.
Present.
Luella Williams.
Present.
Joseph Hardick.
Okay, we're gonna get started. Joe, jump in when you get there.
Okay, 1 second, Nick. CEO Rick Lee.
Here.
CFO Christine Lacurdo.
Here.
COO Rob Lacurdo.
Here.
Vice President of Administration Chris Tuff.
Present.
And Brian Schultz. Mr. Chairman, it's all yours.
Okay, folks, we'll start with the audit and finance agenda. Christine, why don't you take us through that?
Good morning, everyone. Thank you, Mr. Chairman. I would just like Barry to make an announcement regarding the roll-off of our audit partner as it relates to the public authority law. Barry?
Thanks, Christine. I just wanted to, we are going to have a presentation this morning by the auditors, and there is a requirement in the public authority law that the lead of audit has to be shifted every 5 years. And there isn't any wording to that effect in the presentation, but there doesn't need to be. It doesn't need to be. The fact is that the lead auditor has traditionally and always been rotated, whether or not that office maintains the position of auditors, that every 5 years they'll be rotated out to lead auditor. So thank you, Christine, for asking.
Thank you, Barry. So I would like to introduce to you Keely Ann Hines. She is the partner in charge for our audit this year, and she's going to make a presentation to the board regarding our audited financial statements. Keely, whenever you're ready.
Good morning, everyone. Thank you for that, Christine. Let me just share the presentation on my screen here. Okay. So as Barry had mentioned, yes, I am serving a one-year term as your signing partner, and I have not worked with you folks at Central before, so this is my first experience. So I appreciate everybody welcoming me with open arms. Ironically, a global pandemic broke out when I took charge of this, so hopefully that's no greater sign for me needing to look into other career paths or something like that. But we'll make this quick and brief. I locked my kids in the basement, so I only have so much time to work with as well. This is probably a similar format from what you've seen from Greg Evans, the partner that you have had on the engagement for the last 5 years. I'll touch on, in general, required communications that I have to have with you folks at the conclusion of the audit. We'll touch on some financial highlights. There was a prior period adjustment, which I will speak to. And then part B, C, and D will speak to the required reports that we have to issue for your single audit and government auditing standards. And then part E will finish up with a quick SCASB update on new upcoming pronouncements.
Sounds good.
I'm sorry, what's that?
It says proceed. That's fine. You can move. Keep going.
So with regards to our required communications, we are issuing unmodified opinion on your March 31, 2020 financial statements. That is the opinion that you are looking for. It's the highest level of assurance that we can provide on the audit. This year, there were no new accounting pronouncements adopted and implemented in which would have a significant effect on your financial statements. And there were no questionable transactions entered into by the authority that lacked guidance or involved any sort of creative interpretation. Along with your financial statements come some significant estimates, which is common. The most significant estimates that you folks have are related to your OPEB liabilities, your workers' comp, health, and dental medical claims, your general liability claims, as well as pension liabilities. And we'll talk about some of those changes from the prior year in the coming slides. And then a couple other significant estimates are the useful lives of your depreciable assets and the allocation of service overhead to the various companies. So as part of our audit, we evaluate those factors and assumptions and determine that those estimates that management has put in place are reasonable, and we do not feel that they are causing any sort of material misstatement in your financial statement. There were no significant difficulties encountered in performing the audit or dealing with management. We did not identify any material audit adjustments as a result of our procedures. This is a significant point for the board to always keep in mind. That means that the numbers that Chris and her team have been providing you folks are a reflection of your year-end financial statements, and our audit procedures did not result in us coming in and finding a variety of errors that would require correction before we could issue that unmodified opinion. So that should be comforting to you folks, and that your finance department is in fact presenting accurate information throughout the year and was able to do so without our audit procedures. As I mentioned in the beginning, there is a prior period adjustment, and we will talk about that briefly. And then there's no past adjustments. So what that means is, at times in performing our audit procedures, we may find certain small differences in which are not material, but significant enough for us to keep track of to ensure they don't accumulate to a material misstatement, and there were no instances of that. We had no disagreements with management. They did not consult with others in hopes of trying to manipulate the outcome or opinion shop. And our discussions with management throughout the year are in the normal course of our professional relationship. With regards to the prior period adjustment, management discovered this year that the workers' compensation liability has actually been overstated for a handful of years, and that was the result of that stop loss amount in excess of $1.5 million being included in Centro's liability in error. So what that meant is it was actually an adjustment that was made in your favor, because the liability and the expense had been overstated in the previous years. So if you look at this year's financial statements and compared it to the prior year financial statements, you will see that net position as of April 1, 2018 has been increased by a little over $1 million. And then April 1, 2019, that $1 million plus another just shy of $800,000 was restated to increase that accumulated net position for that error. Again, management detected that, and we confirmed those new balances with travelers, and your financial statements reflect those corrections. With regards to some financial highlights, as of March 30, your cash balance has increased by about $3 million to $4.4. You have cash of about $4.92 million tied up with travelers, workers' compensation as part of a required collateral reserve for the agreement that you have with those folks. Receivables in total up about $0.4 million, mostly driven by increases in grants and trade receivables. Your inventory remains relatively flat at about $4 million, and your prepaids and other assets increased about $700K, and that was mostly the result of that workers' compensation reserve increase from the prior year. Capital assets had a net decrease of $2 million from the prior year. AP and accrued expenses decreased about $500,000. Mostly that is attributed to just timing and cutoff of when disbursements are paid. Accrued salaries, benefits, and related liabilities remain consistent. And then those long-term related items, pension and OPEB, had pretty significant increases. The takeaway from this is often for boards, it's alarming to see, you know, $156 million, $5 million increases. These are based upon actuarial valuations. We review those and consider those figures. The real big takeaway from that is that you continue to pay as you go, so to speak. You pay for those expenses as they are incurred. Unfortunately, this is just a byproduct of GAAP of having to capture that entire projected liability based upon a number of factors that the actuary takes into consideration, such as discount rates, inflation, mortality tables for how long they expect for your employees and their respective spouses to survive, things of that nature. So those numbers do move pretty fluid, but doesn't really change anything with regards to how you continue to budget and pay as you go. Your current assets of $23 million compared to your current liabilities of about $6.5 million. And again, you continue to carry that significant negative net position, but that's really being driven by those long-term liabilities, the OPEB and the pension. In total, operating revenues remained consistent with the prior year with only a slight increase. Non-operating revenues increased a bit with by $2.5 million for state aid. Capital contributions increased about $2.8 due to state grants, and your total expenses increased by about $32 million, mostly driven by that OPEB expense increase. Your change in net position had a decrease of $39.7 million, continuing to be in a negative number, and as I mentioned before, really mostly being driven by those long-term OPEB and pension obligations. Okay, with regards to our government auditing standards and uniform guidance report, this is the report that you're looking for. There were no significant deficiencies, no material weaknesses, no instances of non-compliance. And then with regards to specifically the major program for the single audit, which is driven by the federal dollars that you folks receive, we expressed an unmodified opinion similar to your financial statements, again being the highest level of assurance that we can provide, and we felt that the compliance and internal controls over compliance related to that program were all adequate. Similar to the previous years, we tested the federal transit cluster, which is captive 20.507 and 526, and the authority continues to be a low-risk auditee. That's based upon a number of factors in which we have a 2-year look back that's outlined in the standards where we consider whether you've had previous findings, whether you have filed late or on time, and you continue to be a low-risk auditee, which is good. In conjunction with our financial statement audit and federal single audit, we also conduct a New York State single audit. So those are the funds that pass through the New York State Department of Transportation. Again, no findings, and we issued an unmodified opinion. So again, highest level of assurance and the best report that you can obtain. We also issue a report with regards to compliance with laws and regulations related to investment guidelines for public authorities. So although you do not maintain investments at this time, we do make note that there was nothing that caused us to believe that the authority failed to comply with those policies, and you are still required to have that policy and obviously comply with all of the applicable laws and regulations. And there were no concerns with that as well. Again, the highest level of assurance and the best report that we can provide with regards to that. Part E, GASB update. The GASB continues to be rather busy as they have been in the last decade or so. Most recently in May, they did issue GASB 95. This would probably be my most favorite GASB that has been released in recent years. This did allow for governments to have a little bit of relief with regards to some of the upcoming pronouncements, and they deferred a number of the implementation dates, specifically GASB 87. I know Greg had previously kicked off some conversations with management on this with regards to leases. It's a pretty complex, in-depth pronouncement. It was previously effective from March 31, 2021, which would be next year. it received an 18-month deferment, but with that, given the fact that you folks do not operate on a calendar year, it actually puts it out to March 31, 2023. So that certainly provides us with a lot more time to wrap our arms around that, work with management to implement that, and we have some tools and resources in the works with some spreadsheets and kind of implementation tools that will help gather that information to ease into that adoption a little bit easier. So we will continue to work directly with management on that. And then GASB 84, it relates to fiduciary activities. So at this time, Centro does not have fiduciary activities. So for those accountants in the room, that would be like a trusted agency fund if you're thinking back to your fund accounting days in school. The effective date for that will be March 31, 2021. The idea behind this standard is to clearly establish criteria for identifying fiduciary activities. For a number of governments, a lot of it has to do with things that were previously sitting in fiduciary funds that no longer qualify as such. In your particular case, not already having fiduciary activities, we will consider the applicability of your defined contribution plan and the fact that you have single employer pension plans. This has been a pretty sticky pronouncement already. They've issued some implementation guides and Q&As to allow practitioners to gain a better understanding of this and to assist with implementation. And we are actually looking for the GASB to put out some more information specifically on the defined contribution plans and some of the pension plan caveats as to what would dictate a fiduciary activity. But again, this would be a lot of disclosure and perhaps adding some additional schedules to your financial statements, but no real change with regards to how you folks operate or what we would need from you. And as those Q&As and implementation guides continue to come out, we'll work with management on ensuring that that evaluation is complete and accurate and that your financial statements continue to be in compliance with GASB. Any questions?
So far, this is Nick Lano. I just want to say this is going quite well. I think Christine and her team has done an outstanding job once again. We know we're getting the right numbers. Pretty damn important for us. You can continue.
That's all I have for you folks, unless there's specific questions. I just want to thank Chris and her team. This especially was a unique situation, having to implement the partner rotation and then certainly having to do this audit completely in a remote environment. But we greatly appreciate Chris and her entire team's efforts in making this go as smoothly as possible. So I greatly appreciate it, and it was a pleasure working with all of you.
We appreciate you coming in. You did a fine job. It's never easy to have condition under. But once we get the right numbers on top of things, we have the right opinion. So I'm proud of the finance of this authority. I'll leave that open. Anybody have any questions regarding that?
Yes, it's Bob Suselich. Quickly, in your presentation you talked about OPEB, unfunded projections of liabilities. Okay, this is municipal finance, and you know the numbers can look. Okay, the first question is basically talking about unfunded potential healthcare liabilities, correct?
Correct.
So I think it's clear with in municipal finance that these are non-current cash expenses and these are just projections, meaning what people have to be aware of, and correct me if I'm wrong, when they look at these big numbers, it's not necessarily damning to the financial condition of the municipality or the authority, correct?
Correct. These are long-term projected estimates based upon what the actuary has determined. But you're absolutely correct. These are estimated numbers, and they don't really change and affect what you're doing in the moment. New York State actually doesn't allow for anyone to fund the post-employment benefits, so there's no sort of action for you folks to be taking or any sort of consideration that you should be making at this time. You continue to pay as you go, as I stated, and pay for those benefits for those employees, so to speak, cashing in on post-employment benefits currently.
Yeah, and this is important too. So you have your internal Chris's group monitoring this. You have the auditors, but you have the actuary. And correct me if I'm wrong, Christine, does the actuary take a look at this every 2 years?
Sorry, Nick, what was that? Does the actuary what?
They look at it every 2 years. Is it every 2 years they take a look at these numbers, or every year?
They actually provide a report annually.
Okay.
Yeah, they do a roll forward based upon data. They do what they call like their full valuation, and then they do a roll forward to consider any necessary changes in assumptions and evaluate that, for instance, you haven't had a significant change in your head count or your post-employment benefits that you're offering employees. So they do actually consider those figures on an annual basis.
They might look at even like mortality rates and a bunch of different things. So it's whoever got into the actuary business when this came out, they're doing quite well. Anyway, any other questions out there? Okay, with that, with no more questions, I need a motion to accept the audited statement and related report as presented.
So moved, Darlene.
I'm sorry.
Second, Bob.
Thanks, Bob. Any questions? Without any questions, a motion to all adopted, please say yes.
Yes. Yes.
Very good.
Yes.
Any nays? No. Okay. Motion moved. Very good. Thank you, Chris. Thank you, Keely. Thank you very much. Okay, Chris, on the next one, we got John Bailoff down there on the bottom. Can we push him up to the top? Right now, is John on the... John, are you there?
I'm here.
Oh, thanks, John. Can you talk about our ITC insurance renewal, please?
Sure. Good morning, everybody. Hope everybody is well. Our property liability package policy for the transportation center has a date of 7/1/20 to 7/1/21. We're primarily interested in the costs. Our costs last year were $88,000. The cost for the upcoming term is $96,506. The cost is driven by an approximate 8% increase in rate, but primarily by increase in our limits of coverage to accommodate the increased cost of construction of the facility, as construction costs have risen. Our building and contents limit is $8,200,700. We anticipate a rental income, which we also insure, of $512,700, and parking lot receipts of $286,200. The only part of the program that is subject to change by audit would be the receipts from the parking lot. Our deductible is $2,500 per claim. Included in the cost is our garage keeper's legal liability, which is our legal responsibility for vehicles in our care, custody, and control while parked, for which we have made a charge. And that's basically it. The carrier would be Travelers, which turns out to have been the lowest cost of all the carriers that we obtained premium quotations from. That's basically all
Thanks, John. Any questions for John? Pretty simple there. Without any questions,
I'll move, Charlie.
Darlene, second.
Tina Noella.
Okay, second is Tina. All in favor? Aye.
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 Very good. Okay, thank you, John. Have a great
Thanks,
weekend.
Nick. Good morning, everybody.
Moving back up to the agenda to, I'll be over to Christine with our, summary, financial information section, PAL 2800 of the annual report. Christine?
Sharing the screen.
Good morning, Mr. Chairman. Would it be okay to allow Tanya and Keely to leave the meeting?
Christine?
Absolutely. Oh, I'm sorry, guys. Please.
She's clicking
You
on
may
those
leave.
files
Thank
in
you.
the email.
Thank you very much.
You want?
She's
Thank
clicking
you.
on
Have a
those
great
files.
weekend. You too.
Oh.
Take care. Okay, so moving along, you all received a copy of my written report, and this is the time of year that we bring forward all of the reports that you are required to approve for our public authorities law reporting in the Paris system. And the first one of those is the annual investment report that I have displayed here on the screen. Would you like me to continue to move on?
Sure, go right ahead.
Next up would be our investment guidelines that we're required to adhere to. I know Keely made a mention about this. This is also included in your report. No changes from prior year. The Public Authority Law 2800 procurement report, I'm sorry, 2879 procurement report. That lovely document that incorporates all of our contracts greater than $5,000. And lastly is the disposal of property guidelines. Also, no changes from prior year.
So basically, Christine, we're in compliance with all of this.
Yeah. So let me just backtrack a minute, Mr. Chairman. So motion one was the presentation from Bonadeo, which you've already moved for approval. Motion two is where we take that approval and we translate it into the format that is required under our Paris reporting system. That it's implicit that that has been approved by virtue of you reviewing the audited financial statements. And then motion 3, 4, 5, and 6 are those documents that I brought up on the screen.
Okay, very good. Any questions for Christine regarding this? This has kind of been an annual thing for us. Okay. Barry, can I bundle these motions, or do I need to do each one separately? Barry, you might be too.
Yes, no, I just haven't taken that I'm learning how to unmute, which everybody over all these years has wanted to mute me. Nobody ever told me not to mute or how not to mute because they were happy about me saying anything. But yes,
Okay. So with that being said,
bundle away. I'll get it in my minute.
Oh, thank you. I'd like to take motion 2, 3, 4, 5, and 6, and I need to approve those.
This is Tina, so moved.
Thank you, Tina.
Darlene?
Hey, Darlene, second it. Any questions? No. All in favor? Aye.
Aye.
Very good. Okay, Christine, you just mentioned briefly, it's standard, our resolution Resolution 3B, 2020 annual subsidy payment.
Yes, Mr. Chairman, these are not related to any accounting entries, and they're based strictly on the approved budget, operating deficit, excluding operating assistance and MRT. The purpose is to reinforce the legal separation between the authority and its various central bus operations.
Very good, next, all standard for many years. Anybody have any questions regarding that? If no, I need a motion.
Bob Suslik, so moved.
Thank you, Bob. Second, please. Thank you, Well. Okay, any questions? All in favor?
Aye.
Aye. Very good.
Aye.
Okay. Moving on to Resolution 3C, replacement of supervisory vehicles. TJ, go for it.
Good morning, everyone. This is a resolution to purchase 4 replacement supervisory vehicles. Will be funded with 2 separate grants, one federal, which is 80% federal, 10% state, and 10% local, and the other half will be funded with 100% state dedicated funds. These vehicles will be purchased off a New York State contract following federal procurement guidelines. We're asking for the board to authorize up to $200,000, which is the grant budget total. We still have to go out for a mini bid through the grant or for the OGS New York State system.
This includes the CEO's new Suburban.
Any questions on these 4 vehicle replacements by the board?
March of 23.
How many, how many, you go by how old the vehicle is or how many miles is on the vehicle when you replace them?
The federal guidelines are both by year or mileage, and it's 4 years or 80,000 miles. And then in the vehicles that will be up for that will be replaced will be out for public auction.
Okay, motion to move this.
So moved.
Okay, we got a motion by, I think that was Tina. Second, I heard Luella. All in favor? Aye.
Aye. Aye. Aye.
Okay. Resolution 3D.
Thank you very much.
Ratification of Microsoft licensing. Caitlin.
Thank you, Mr. Chairman. Good morning, everyone. So this is the resolution for Microsoft software licensing. Will be paid for using operating funds. The term of this agreement is 3 years, much like when we entered into in 2017, and covers all of our current Microsoft software. The cost for the 3-year total agreement is $114,611.01. This is New York State contract pricing through Dell. We are asking for a ratified award back to June 1st of 2020.
Any questions for Caitlin for this Microsoft licensing? Okay, without that being said, I need a motion to bring it to the full board.
So moved, Darlene.
Thank you, Darlene. Second.
Luella.
Thank you, Luella. Any questions? All in favor? Aye.
Aye.
Aye. Okay, moving on to Resolution 3E. Credit for bus service not rendered under the contractual agreement. Steve, give us a little background on this so we're all comfortable.
Yeah, so as you know, we have revenue contracts with several agencies and organizations to provide bus services. We bill these agencies and organizations in advance at the beginning of every month before the services are provided. In the month of March, we bill these agencies for the upcoming month. As you know, many of our services were discontinued in the middle of the month. These services were not provided to these agencies. So this resolution authorizes the authority to issue either a credit or a refund to several agencies that we provide services for. Syracuse City School District, Syracuse University, the SUNY Oswego College, and also the SUNY Oswego Student Association.
Steve, what was the total on all of them together?
All together was about $458,000 per total.
Yeah, that's a real loss, folks, because you budget with that money and then you have to, return it, which I agree, service not rendered, it is what it is. But it does take a little hit there. Good, I mean, I think they'll be very happy, once they get this, credit back to them. Any questions for Steve on this matter? Okay, motion to bring it to the full board?
So moved, Darlene.
Sorry.
Second,
Hobson,
Bob.
so moved.
Yeah, second, Bob. All in favor? Any questions? All in favor? Aye.
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 Thank you, Mr. Chairman.
Okay, Christine, is there any other business in here, or that'll conclude our agenda?
Yes, thank you, Mr. Chairman. I'd just like to mention that although we did take that $400,000 hit, we were able to net it against our COVID dollars. So we were able to recover that through that calculation, and which we were able to pull down. So that's a little bit of good.
Thank you.
Lastly, I would just like to say that we have the most amazing accounting staff ever. What they have been able to accomplish year over year over year is absolutely fantastic. And then they had to do it under the worst case scenario, and I can't thank them enough. They stuck to it. They were able to get our audited financials done on time, and we will be able to remit that to the state on time. And that wasn't any easy task, I'll have to tell you. So I would just like everyone to recognize that they did a phenomenal job this year as usual, but under really difficult situations. So thank you very much, my staff.
The board appreciates that, and you gotta understand, these are thousands of transactions that go on. So, boy, let me tell you, we're really lucky. Thank you. Thank you for your whole part.
Thank you, Mr. Chairman. That concludes my report.
All right, folks, that concludes the audit and finance. What I'd like to do is go right into the main meeting.